Why most people stay poor, and how early investors build lifelong wealth. The hidden truth about investing in America. Most people don't realize how uncommon real investing actually is. Yes, 62% of Americans have money in the stock market. But that number hasn't changed in decades, and it doesn't mean they're building wealth. Many invest without a plan, without consistency, and without a long-term mindset. If you're already investing regularly, you're doing something most people wish they started years earlier. You're giving yourself a head start that can compound into real financial freedom. Why young investors are breaking the cycle. Here's where things get interesting. Nearly 44% of Americans aged 18 to 29 are already investing. That's the highest in history. They're starting early because they see how expensive life has become: homes, cars, raising a family. They know the only way to stay ahead is to build wealth now, not later. Even small amounts today can snowball into something life-changing. The magic of time and why it beats everything else. Time is the most powerful advantage a young investor has. A single dollar invested in your 20s can grow into $20 by retirement. $100 becomes thousands without lifting a finger. Every purchase decision suddenly matters. Skipping one small luxury today feels like buying your future self something far more valuable. That mindset shift creates discipline, patience, and long-term vision. The wealth-building mindset that most people never develop. People who start investing early aren't always rich. But they're thinking differently. They pause before spending and ask, how long do I need to work for this? They understand delayed gratification. They stay calm during market dips instead of panicking. These small habits are the foundation of becoming wealthy, but they are rare. Why early investors end up miles ahead. Even if young investors start with $50 or $100 a month, consistency changes everything. They're preparing before life gets complicated. That mindset alone puts them ahead of many peers. Most young adults have a median net worth of just $39,000. Anyone investing early is already on track to surpass that long before age 35. And that advantage compounds every single year. Compounding, the point where your money works harder than you do. Net worth doesn't grow in a straight line. It accelerates. At first, your contributions do all the work. Then the magic happens, your investments start earning more than you contribute. That's the snowball effect, and it's why early investors end up in a different financial reality. They gain flexibility, freedom, and peace long before retirement. Monthly dividend investing, turning wealth into monthly income. And this brings us to one of the most powerful wealth tools, monthly dividend stocks. Most companies pay dividends for times a year. But monthly dividend stocks pay you 12 times every single month. Every payment can be reinvested immediately. That means your money compounds faster, grows more often, and becomes a self-expanding income machine. This is how investors eventually replace job income with passive income. The power of a $100,000 dividend portfolio. Imagine John invests $100,000 into reliable monthly dividend stocks. These aren't speculative plays, they're companies that survived multiple market cycles. They offer three things that matter: steady yield, growing payouts, and share price appreciation. When you combine all three with reinvestment, the results become exponential. Let's walk through the top 5 and see how each transforms $100,000 over time. Stock number 5, Agree Realty, ADC. Agree Realty is a steady REIT that leases properties to essential businesses like Walmart and AutoZone. It's built for stability, low volatility, and predictable cash flow. With a 4.26% yield and strong long-term growth, a $100,000 investment can grow to over $267 million in 30 years. By then, it pays over $3,100 per month in dividends alone. Slow and steady, but incredibly reliable for long-term income investors. Stock number 4, number 3, number 2, the income builders. Main Street Capital, Realty Income, and Sabine Royalty Trust take things up a level. Main Street delivers around 7.5% yield and grows into nearly $3 million over 30 years. Realty Income, the famous monthly dividend company, pays dependable income and reaches about $145 million. Then Sabine Royalty Trust, fueled by oil and gas royalties, skyrockets above $33 million with strong payouts. Each one shows a different formula, but the result is the same: a massive long-term compounding. Stock number 1, Gladstone Capital, GLAD, the dividend beast. And finally we reach the top performer, Gladstone Capital. With a yield near 10%, disciplined lending, and steady monthly payouts, it turns $100,000 into a stunning $279 million. More importantly, it pays over $23,500 every single month after 30 years. That's not a side income, that's a salary-level paycheck from dividends alone. And most of that growth comes from reinvested cash flow, not stock price jumps. The final lesson: start early. Stay consistent. Let time do the work. Most people wait too long to start investing. They think they need more money, more knowledge, or better timing. But the investors who win are the ones who start early, stay consistent, and let compounding work quietly in the background. Monthly dividend investing is simply a tool, a powerful one, that turns small decisions into lifelong wealth. The real difference is the mindset. Start today, and your future self will thank you for decades. Thanks for watching. Subscribe. More videos on investing every day.